What's up guys, welcome back to DCA. So what we're going to look at today is the price levels and the number of coins that both short-term and long-term holders own Bitcoin. So in my opinion, this metric has very strong implications in both the short and long-term time frames. And that's simply because if we can know where long-term holders own lots of the asset, we can then have a better understanding of where we may see support levels form at. We can also tend to see where we'll come under sell pressure as we move up to the levels where short-term holders who are currently sitting at a loss will be happy to sell their asset at a break-even point, and therefore we may turn around at those points. And in fact, we've recently seen that. We recently did a video just a week or 2 weeks ago where we showed during this run that we were going on late in January, early February, we showed that, it was very likely we were going to come under sell pressure at around the 45 to 46K level. And that was simply because there were numerous holders of the asset at that level. Now, what we didn't talk about during that time, though, was the differentiation between short-term holders and long-term holders. So we're going to take a look at this metric, but we're going to further segment it today. So we're going to get a better look at where these holders that are more likely to sell versus these holders that are more likely to hold the asset and form a level of support. This will give us a framework with which to gauge where the price may be headed to in both a longer term time frame and in a shorter term time frame, which in my opinion is going to be very helpful to people to understand what the potential downside for the asset is in this time where we're seeing so much downward pressure in the markets, the stock market included. We're seeing macroeconomic uncertainty at the moment. With the potential war between Russia and Ukraine looming over the markets, we have the Fed decision on interest rates coming up. There's simply put a lot of uncertainty in the markets right now, and looking at this type of information can help us understand what's going on. It can prepare us, and therefore, when certain eventualities come to pass, we will be ready for them. So with that said, guys, let's do it. Okay, so let me break down what's going on in this chart because it looks very busy, but it's quite frankly, it's simple as can be. So what we have here on both of the y-axes, you have 2, 3, 4, 5, 6, and 7. All right, and this is multiplied by 10 to the 4. So we're basically looking at 20K, 30K, 40K, 50K, 60K, all the way up to 70K. All right. That corresponds to a price level. And then you'll see that we simply have a price chart for Bitcoin here. All right. So this is nothing more than the price of Bitcoin since December and heading into January and through current time. And then what we have over here is nothing more than the identical thing that we had over here, with the difference being we're looking at price levels at which short-term holders on the left in this yellow-orange color and long-term holders on the right in red. And then up here, so down here you have time, and then up here all you have is the number of coins held at these levels. Okay, and we're looking at 10 to the 5th, so we're talking about 100,000, 200,000, 300,000, etc. And the same thing over here. So 100K, 200K coins, so 200,000 Bitcoin, 300,000 Bitcoin. So as an example, at approximately, if we just come down here to 40K. At 40K, there are approximately 150,000 Bitcoin held by long-term holders at $40,000. So let's start by talking about short-term holders. Now, first of all, let's establish what is a short-term holder. And a short-term holder is simply an individual who has held the asset for less than 155 days. So that is the number, or the number of days, that after that point, an individual is statistically much more likely to continue to hold the asset. Meaning if the price goes down or up within reason, that individual is much more likely to hold the asset and to not sell than one of these individuals in the short-term holder camp is. Someone who is a short-term holder is, statistically speaking, much more likely to sell. Okay, so let's talk about where short-term holders own Bitcoin. And the first thing you'll notice, we have a large number of short-term holders right in this zone here. So we're talking about the the upper 40K level and into the lower 40K level. So basically all through 40K, we have a lot of short-term holders. And since we're talking about short-term, recall this has to be within the last 155 days, we're mostly talking about people that bought coins in this area and in this area. So you have numerous holders of the asset in these zones. Now, even if you want to go a little bit further down, you can see that we're nearing, people with almost 150K coins also at this 40K level and all the way down to around 38K. So realistically, we could say in this zone, there are a high number of individuals holding Bitcoin in the short term. Now, what does that mean exactly? And what will that mean for us? Well, what we talked about in the last video where we discussed this same topic, we showed that there were simply a large number of holders of Bitcoin right at around this level here. So, this is obviously going to be constantly changing, particularly for the short-term holders. So we had a large number of coins held in this level. Now you'll notice that this number has come down somewhat, especially at the upper ends of 45K. So right at around 45 to 46K, we had a large number of holders. Now that has come down. And what is the reason that it's come down? And that has been that there's a sell-off that has occurred each time that we've got up to this level. So you see, as we were coming down initially, when we were coming down in December and into early January, we tried to rally back up to around this 46K level and we got rejected there. Then we came all the way down to 32K, went back up to this level and got rejected. And we said back at that time, we were still, right at around 41, 42K. We said we're probably going to have a big test at 46K that will be difficult to get above. And that was simply because there's many holders right in this region. And you're continuing to see this fact. So it's a twofold issue. First of all, someone who's a short-term holder that bought, let's say, right at around this level, maybe they were expecting a turnaround here. So right at around, 41, 42K back in December or early January. We came back up to 44, 45K, got rejected, and that's when we went all the way down to 32K. So those individuals were happy to exit the asset back at around these prices when we finally did rally back up to those levels. And we got rejected there in part because of these short-term holders selling the asset as we were coming into this zone. Anytime that you have a rally, you naturally have the retail market, whoever's left in it at this point, FOMOing in, hoping that the price is going to turn around. So this is a common mistake that the retail market makes over and over and over again. Back then, no one would have suspected that Bitcoin would head down to, a consistent 30K level. But nonetheless, that's where we are now. And we're being, in part, we're going to come under sell pressure anytime now that we go back above around this 38K level. Now, that's not to say we can't get above it, because clearly we can. If a big time player steps in at any point and decides, yep, this is the place where I want to enter the asset, we could explode right through all of these resistance levels like butter. But in the current market conditions, I'm not anticipating that any large player is going to be FOMOing into a 40K asset, especially if they believe, in the setting of the macroeconomic uncertainty, in the setting of seeing the stock market sell off every day, why would they want to enter the asset at these levels when they know that all of these short-term holders, millions of coins are being held in this 40K level, and they know that if the price continues down, these individuals are very likely to capitulate. So you have something like 2 to 3 million coins in this 40 up to 50K level held by short-term holders that are very likely to capitulate the asset. And I think that, the smart money, as they're called, understands this fact, and they understand that these individuals are very likely to sell the asset. Okay, guys, so the next thing we're going to do is discuss long-term holders. Now, why do long-term holders matter so much in the grand scheme of things? Well, these are individuals who are simply much less likely to sell the asset. In fact, these holders will tend to form areas of support for the asset. So we're going to break down major groups of long-term holders and look at areas of concentration of long-term holders and discuss what the potential implications of that are. So we're going to start by talking about this upper group here. So we're talking about individuals holding the asset between 45K or so all the way up to the top. And you'll see for long-term holders, that tends to be up here at around 64 to 65K. Because recall, these are individuals who have held the asset for at least 155 days. And if you bought all the way up here at the top, you simply can't be a long-term holder yet because of the fact that 155 days hasn't elapsed. So primarily, we're talking about these individuals here. So many of these individuals fell for the common trick on YouTube where you have some YouTuber who knows nothing about markets yet has hundreds of thousands of followers telling them to buy the dip every time the asset goes down a few $1,000s, and they're telling them that as it's getting into the overheated stages of the market. And it turned out to be obviously bad advice in the long term because you were buying dips for very little upside. So what we saw is that many new long-term holders sort of bought in this region here. You see that we have this very top-heavy region where numerous individuals who have now become long-term holders have bought the asset. So we're talking this 45 all the way up to 64K zone. So they bought right at the end. And, while at this time, if we go back to the beginning of 2021, many individuals had the asset in this level. You see that, there's still a lot of holders here, but you have to recall many of them at the time were short-term holders and they capitulated. For instance, when we were in this region here, there were many short-term holders, many more coins in this level, but they've been capitulating on the way down and then rebuying back into the market and then capitulating. And it's a vicious cycle that the retail market falls into over and over and over again, and it's rinse and repeat. So they continue to do it. As each time we go on a small pump, they're tricked into buying here, they're tricked into buying here, they're tricked into buying here. Of these individuals, some of them will become long-term holders. They won't capitulate if we head further down. Just like we're seeing these guys over here. So these guys up here, some of them, learned their lesson. They said, I messed up this market cycle, but I'm going to do better next market cycle and I'm going to become a long-term holder. So that's how we get this group here, very likely. So when we're coming up into these levels, some of them may eventually sell. They may be happy to get out of the market, especially if we come back to these levels, very soon. Let's say we went up to 50K next week. I think you would see a lot of these individuals willing to get out of the market because of all of the surrounding uncertainty in the markets. So many of them at this point may be willing to get out. But overall, if the market plays out like it has in the past and we headed down from here, when we do come back up again, many of these individuals will continue to sit on the asset hoping for much higher prices because these guys aren't holding the asset in all likelihood in order to sell back at their cost basis. They want to sell at 100K or more. So let's talk about the next level. And we have this group down here at around 41K all the way down to around 32K. And what we have here are the more savvy investors. These are the guys who, maybe bought some back here in January, maybe bought some here in May through July, and then have been acquiring the asset as we've been going down into these levels again here in February, January and February. So we've been down in this zone, and what we've seen each time we get down into this level from around 40K all the way down to down here at around 32K, what we have seen is that many individuals at these levels are willing to step in and purchase the asset. So we have many holders of the asset in this level. And that's exactly what, the price has played out in such a way that reflects this. Anytime that we get down into these levels, this has acted as a general level of support. Okay, it's sort of like back in 2018 when we went down to, around the 6K level. We went down to 6K or 6,300, whatever it was. 6,300 bounced up, 6,300 bounced up, 6,300 bounced up, and we did that 4 to 5 times before eventually having one final large capitulation, which sent us down to around 35, all the way down to maybe 3,200. So that's kind of what we're seeing right now. We have a larger group of individuals holding the asset right at around 36 up to around 37K. We have nearly 335,000 coins. Then if you go down here to around 32K, we actually have around 220,000 coins sitting there. All right. If you come over and look at the short-term holders, notice they have very few coins in that level. And that's because this is another issue. Anytime the short-term holders do make a good trade or a good buy, like they bought down at this level, they sold the second that we got up here. So you saw these numbers, which were a little bit higher when we were down here, in the early to mid parts of January. And then they sold right once we got into this level. And that's how you have this number growing, both from the upside and the downside. All right. So what we're saying is you have a fair level of support all the way down to around 32K. Okay. And then notice that we actually have another around 150K coins held down here at nearing 28K. So these may be coins that some of them were bought here when we had this final dip in July, or it could be even back here in January or even in late December. So you have support down to around 28K. The problem becomes if we fall below 28K. So something that I've noticed in the crypto market, particularly crypto YouTube, there's a word which is hands down the most overused, financially irresponsible, immature word that's used over and over and over again. And that word is FUD. FUD, in my opinion, means something that's made up, something that is simply stated in order to start drama, something that's used by, non-crypto enthusiasts or individuals that are against crypto. FUD is different from reality. Reality is doing nothing but stating an objective fact. And that's what we are doing here. Anytime that I talk about something that hurts someone's feelings because they're invested in the asset and they become emotional about it, well, I'm sorry about that. But like I always say, I'm not your mom. I'm not here to make you feel better. I'm here to tell you the objective facts. If you don't like that, you can either A, put on your big boy or big girl pants and grow up, or B, you can go watch another channel. Because what I'm going to do here is help you understand the market and help you understand what at least the potential situation is. Then you can do with that information as you want. If you're someone who cannot stand to hear the facts, to hear the reality of the situation, then you're in the wrong place, and I have no trepidation saying that. I'm very bullish on crypto in the long run, but at the end of the day, what I'm doing is looking at the short-term scenario. I'm looking at the information, I'm seeing what's playing out in front of our eyes, and I'm simply telling you that these things that I'm stating are simply the reality. That leads me to the point that if we were to fall below this 28, 27K level, there exists very little support for Bitcoin all the way down to around 20K. Now, that doesn't mean Michael Saylor couldn't step in, or some other kind of whale like that, an institution, couldn't step in at some point and buy through the 20K level. In fact, they could step in anywhere and buy 1 million Bitcoin, and we could be headed to the moon. Based on the situation, based on the macroeconomic picture, based on everything that's going on in the markets, it simply doesn't look like that is in the cards at the moment. So all I'm doing is showing you that, short of this 32K level, there's very little support for Bitcoin. So falling down to the 20K level is not out of the realm of possibilities. In fact, if I just show you this, okay, so realistically, if you fall below this 32K level, what I've done is zoomed out a bit to show you, now we're going all the way down to 10K levels. There is simply not a lot of support all the way through 30K level, and there's not even a ton of it in the 20K, the 10 to 20K level. Your next major level of support is 12K-ish, 12 to 11 down to 10K. Now, I don't think that's going to happen. I think some of the big time players, even if the market was very uncertain and things were looking very bad, I think someone would step in the 20Ks and make a big purchase. In fact, I don't even think we would spend a long time in the 20Ks. But to believe that it is not possible is to be fooling yourself, because it is absolutely within the realm of possibilities that in the setting of a severe market decline, if that were to come to pass, this is something that could absolutely happen. Because go back and look at the stock market. The stock market has corrected 75% within the last, 22 years. Back in 2000, the stock market from 2000 down to 2002 went down 75%, the Nasdaq did. So to think that Bitcoin can't do the same thing is to be absolutely naive and fooling yourself. So I know this is harsh. I know it makes me sound like a jerk, but at the end of the day, my obligation, I feel, on this channel is to both deliver the positive side of the markets, both to break down the markets from an objective point of view. But being objective also entails that I inform you of what the potential downside is. And in fact, you have a million channels that will tell you that crypto is going to, Bitcoin's going to 100K, whatever altcoin they're still shilling today, it's going to 100X. There's a million channels that will tell you, go look on YouTube right now, type in altcoins. You can find 1,000 different channels that will tell you this coin, don't miss your last chance, et cetera, et cetera. It's all BS. Not many people want to tell you the downside because it hurts people's feelings. They don't like it. It's not popular. I'm not here to be popular. I'm here to deliver a dose of truth that this space desperately needs. So that's it for this one, guys. Until next time, as usual, see you.